A very good morning to all our viewers. You're watching Opening Bell live here on Money Control with me, Stacy Pereira, and I'm going to take you through all those news and cues that you need to be watching out for that will go on to impact your trading day. Well, let's get started then and tell you where the setup seems quite interesting overall, and we are looking at a positive start, at least a gift Nifty indicating that for now, but let's take you through all the other big cues that are making headlines this hour. Well, Wall Street is closing lower for this week, the week that went at least by this after we saw the Dow Jones seeking its worst week since March of last year. Now, job creation in March beats expectations with over 3 lakh non-farm jobs added. Stocks in the Asia-Pacific region have opened mixed ahead of a number of monetary policy decisions that are up ahead this week. The gift Nifty is indicating a higher start for the Indian markets. And in a surprise move, Wipro CEO Thierry Delaporte resigns with effect from 6th of April 2024. He will be replaced by Wipro veteran and insider Srinivas Appalia. They will try and stay. He will try and stay on though till the 31st of May to ensure a smooth transition, but step down before his 5-year term ends in July of 2025. And Bandhan Bank's MD and CEO Chandrasekhar Ghosh also announces his resignation effective from the 9th of July, even as the board has approved a 3-year reappointment and was awaiting RBI's approval. Brokerages issue a caution call as the succession plan remains uncertain. And on to some Q4 business updates. Titan adds about 86 stores and sees its jewelry business revenue rise by about 18% in the fourth quarter. Adani Wilmar achieves its highest ever volumes in Q4, while Godrej Consumer admits to difficult operating conditions but expects its volume growth to remain in the double digits. And it's a fundraising spree on the Lal Street. Well, Vodafone Idea's board has approved a 2,075 crore rupees fundraise via a fresh issue of shares, whereas JSW Energy will go on to raise about 5,000 crore rupees via QIP, and India Bulls Real Estate is set to raise nearly 4,000 crore rupees via a preferential issue. Now, clearly, bulls are leading the street, we could say, in FY25. The first week that has gone by, we did see both the benchmarks close some bit in the green. Yes, there was volatility, of course, but experts are quite hopeful of a further uptrend from here, maybe those 22,700 or 22,800 levels in the coming sessions, and we could see support somewhere around 22,300 or 200 odd levels. But it is that volatility index which saw quite a bit of, we could say that surprising pause, diving down to those lows of November 2023. And that's given the bulls quite a bit of comfort on the Lal Street, we could say. Let me take you through some of the F&O cues then. And if you look at the Nifty put call ratio, PCR that we call it, that indicates pretty much the mood of the equity markets. And we saw that number falling to about 1.03. on April 5th versus the 1.17 levels in that previous session. Remember, an increasing PCR is one higher than 1 or 0.7 means that the traders are selling more put options than call options, which generally indicates a bullish sentiment, whereas the other side, where the ratio falls below 0.7 or moving downwards of 0.5, it means that the selling is more in the calls, which is higher than the selling in puts, indicating clearly a bearish sentiment. So we are sitting quite comfortably above that one level at this point. So we could say that there is that bullish sentiment to continue further, but of course with volatility. Let's look at the stocks that have been put in the F&O ban list, where NSE has gone on to add, of course, Bandhan Bank into that F&O ban list for April 8th, and NSE has gone on to retain Hindustan Copper, SAIL as well as Z Entertainment into that ban list. So they won't be available to trade, at least in the F&O segment of things. If you look at the fund flows that came in on April 5th, we did see FIIs bring in shares, at least buying shares worth of 1,659.27 crore rupees, whereas it was the DIIs this time that went on to sell shares close to 3,370.42 crore rupees. Of course, it was that last trading day also closing in that March series, which is why we saw that big outflow from DIIs as well. But let's get going and discuss some stocks that are likely to be in spotlight today and what should be your strategy as we, trade to the second week of FY25. And joining me for that is Prashant Sawant. He's the founder of Catalyst Wealth. And of course, all of our viewers do keep sending us your queries there because we'll try and get Prashant to answer them through the course of the show. But let me bring on both Prashant. Prashant, what are you looking at with when it comes to the charts for the indices at least? We are seeing pretty much that uptrend and a good support that we've seen at least the last two sessions where the Nifty managed to hold on to that 22,500 odd levels. But do you see that, a further upswing from here, or there could be some bit of pressure, and which is why one should trade with caution?
So, Stacy, very good morning and good morning to all the viewers. Now, if you look at Nifty, a crucial thing to be observed is unless and until we are not closing about 22,550 spot, the move is not sustaining. You're continuously getting drawdowns to around 22,300 back and again. So I think I'll now wait for a close about 22,550, which would be more important, and a follow through later on. I think that should comfortably take Nifty to around 22,700, 750 levels. But I think the index, which I think is looking far more stronger, is Bank Nifty. I think we are within inches of hitting the all-time high again today. And the good part is this time the rally has been led by HDFC Bank, which was quite an underperformer for the past 2 to 3 months. So I think that has come out of the woods and quoting comfortably trading above 1500, 1520 zones. So I think Bank Nifty from here, if we get a closing above a crucial level of 48,800, we can straight see levels around 49,500, 49,800, maybe even 50,000. So I think from here, from a long perspective, the index which looks better between Nifty and Bank Nifty definitely has to be Bank Nifty.
That is true, because the Bank Nifty is just about 143 odd points away from its all-time highs, which was at 48,636, and this happened sometime in December, so barely 100 odd points. And normally when it comes to the Bank Nifty, at least we've seen quite a bit of swings, almost 400 points up and down through the day in intraday trade. So we'll remain to be seen how the Bank Nifty, but like you were pointing out, the components of the Bank Nifty, we did see HDFC Bank, back into that list, participating, giving, adding to the gains, we could say. But how would you really be looking at the other banking stocks and NBFCs? We've seen lots of regulatory work that has come in, a lot of different companies that are now dissecting, especially in the NBFC space. So if you look at the financials overall, we have the monetary policy out of the way as well. How would you be judging these banking and financial stocks, and what would be your pecking order then?
So I think, Stacy, here definitely the first pick stays HDFC Bank, followed closely by Axis. But one bank that is definitely showing strength from the past 2 days, especially, is Kotak Bank, quoting around 1780, 1790. I think 1820 for the week and for the remaining part of the month ahead. I'm talking from a positional basis. So a close above 1820 spot can take Kotak Bank easily to levels around 1900, maybe even 1940. So I think that has strength, and it has a substantial weightage in Bank Nifty as well, which we saw on Friday afternoon. It single-handedly took Bank Nifty up by around 400 points. So I think Kotak Bank would be the stock to watch, and this time a close above 1820 can bring a lot of strength. One can start adding here, keep stop losses around 1750, and as we happen to approach 1820, the stop losses have to be up around 1790. Add positions, and as I said, hold for 1900 levels once we cross 1820.
Right, Prashant, do stay on with us. Let's address a couple of stocks that are abuzz. And of course, one of them will be Wipro. But we're also going to be talking about the IT pack as a whole, because we are kickstarting those Q4 earnings, and we will see TCS report its earnings on Friday. But Wipro is going to be in focus, this mainly after its CEO and MD Thierry Delaporte has resigned from his position as of April 6th. The software major has gone on to then appoint Srinivas Pallia as the new CEO and MD. And remember, Srinivas has been a veteran serving in Wipro for over 30 32 years. He was in his latest position. He was the CEO of America One, and which is where he will now be taking over in place of Thierry. Now, let's talk about the IT pack, and we'll ask Prashant how he is looking at them. Of course, there will be some knee-jerk reaction to specific stocks because of these headlines, but IT as a whole, getting into this earnings season, we've been saying that IT is not likely to see any positive through at least for the next few quarters. But should one be taking a contra call then and say that it is a good time to be looking at IT, and which would be the stocks then?
So I think in this space, definitely there is a lot of weakness, and we are seeing a good bounce back in TCS. But my choice would be to, for some time, stay away from the frontliners and look at the mid-cap IT space. And in this as well, I would not prefer a breakout. In fact, I would prefer to buy a stock which would be near its support and at a very low risk, so that even if I get stopped out, my risk would be low. And I think persistent fits into this perfectly. So we have it trading around roughly 4,000 odd levels. And I think one can keep a positional stop loss around 3,900, 3,880. And from here, if the stock sustains, I think comfortably you can see levels around 4,150, 4,200. So the risk to reward in case of persistence is far better as compared to the frontliners. So I think I'll go ahead with persistence for this.
Right. So Prashant's pick is persistent, but we're going to have to wait and see when it comes to the larger IT stocks and how those really play out and what guidance they give going ahead. Wipro, at least for that matter, had shown degrowth for this Q4, and all of this news is definitely going to have some impact on how the stock reacts. But another stock in focus will be a Vodafone Idea. This after the board has gone on to approve the issuance of about 139.57 crore shares, I beg your pardon, therefore about 14.87 rupees per share. And this will be done by the promoter Aditya Birla Group. And remember, Aditya Birla Group is looking to invest close to about 2,075 crore odd rupees into Vodafone Idea. So that is going to be quite interesting. We've been seeing some bit of action in the telecom space of late as well. So let's let me try and also understand how, in fact, fundraising as a whole we are seeing on the Lal Street. We just told you in the headlines is Vodafone is just one of them, and that another one that really needs that money. But we're also seeing JSW Energy. There is the likes of India Bulls, real estate, all of them looking at different modes of fundraising. So clearly the markets may be not putting in the money, but they are looking at, how else, and which is why they're going through the QIP route and going through this preferential issue of shares. But for Vodafone, particularly, Prashant, what would be your views and what are the charts really saying? Is it a good time to be looking at Vodafone Idea now?
So, Stacy, very honestly, I prefer to stay away from the stock, especially for the reason that it is extremely news driven. And every time we have expected a breakout, or rather the street has expected a breakout around 17, 18, we have straight seen a drawdown to 12. So I think currently looking at the market, there are far better opportunities. But if I were to talk specifically about Vodafone, I think if anybody is long, keep a strict stop loss of 12 spot closing basis, and you can hold for levels around 15, 15.5. But I think more than the upside in this particular stock, I would prefer to keep my eye more on the downside. If it closes below 1250, I think it's better to exit.
Right, so you're saying better to exit. It is somewhere around that 13 odd levels, and these shares, the issuance of this will be somewhere around 14.87. So there is some bit of a markup there, but it will be interesting to see, and especially because we've been talking about Vodafone Idea quite a bit and how they've been having these plans all along. But there on your screen, market open this Monday morning, and you're seeing Nifty quietly poised there above that 22,500 odd levels. We would say about 0.2% of gain, but in the positive. So flat, but with a positive bias is what we can go on to say. The Sensex also seeing some good all 250 odd points of gains right at opening bell. So there 74,400 above levels is where you're seeing the Sensex. Bank Nifty also seeing some good momentum. We could say above that 48,500 odd levels, and we were saying they're almost touching kissing distance to its all-time high, and perhaps is what we're going to see a new fresh record high for the Bank Nifty, and we will be tracking that. Whereas the mid cap and small cap, now though the broader markets is where we've been seeing a lot of action, and there that continuing the momentum there also, about 300 odd points there for the Nifty mid cap, 230 for this matter, but positively in the green. Small cap also there above 300 odd points there. But let's also look at the sectoral indices and which are the sectors that are actually adding to this. The IT pack there comfortably in the green. And this ahead of the earnings, we do see quite a bit of volatility there, and we are going to see most of these bigger names come out with their numbers. TCS is going to kick that off on Friday. But the pharma pack, another one there which is positively in the green. So that counter also, and a lot of the components from the pharma pack have been seeing some good momentum. In fact, FMCG is what we're going to be talking in detail as well, because we have quite a few Q4 updates that have come from Godrej Consumers, Adani, Wilmar and the like. So that one also positively in the green, whereas the auto pack also comfortably about 0.3% higher on opening bell. You're seeing the auto components also perhaps add to this. Nifty metals as well nicely in the green. So pretty much most of your sectoral indices too are rather flat and positive. The metal index, they're almost close to a percentage of gains. So metal pack is also something that has been really pushing the benchmarks, we could say, and it could be components like Tata Steel and the others that could be adding to this. Realty index also there in the positive. So pretty much all of your sectoral indices there quite comfortably in the green. But on your screens, those top gainers and losers, Tata Steel, like I was mentioning, among those metal packs, you have Tata Steel, BPCL and Axis Bank there comfortably in the green. Titan, Hindalco and JSW Steel, so which is where you're seeing that Nifty metal component, almost 1% of gains. Tata Consumers as well as Asian Paints and Hero MotoCorp are your other Nifty gainers. Let's also look at the flip side then, where you're seeing the losers in Apollo Hospitals, Adani Port, as well as Divi's Labs there in your laggards list for today. So we'll have to see what's really adding the pressure to that. Eicher Motors, another one, Bharti Airtel as well as Wipro, which was on expected lines after this news that we were likely to see this bit of pain when it came to at least Wipro. So that is going to be, something which we will talk in detail, especially what is happening in this IT company. Wipro has seen quite a few of its top management exit in 2023, and now this continuing with the CEO stepping down almost a year before his tenure could end. So it will be quite interesting. Let me get Prashant back on to ask him how he's looking at the market open and those ticks, whether they actually tick the levels that he's been tracking, and what should one really be, what should the strategy be for people who are trading at these levels?
So I think, Stacy, the market has opened well, and as I said, the level to be monitored closely is on Nifty spot closing about 22,550. We have traded about this, but we have not managed to close about this convincingly with the follow through. So I think that's an area I'm focusing. I think Bank Nifty is doing well. We are within striking distance of the all-time high. So how we react at the all-time high, and do we manage to close above it? That would be good to watch. And I think one sector which is really doing well is the fertilizer sector. So if you look at GNFC quoting around 705, I think this has a potential to reach levels around 725, 730. So people can look at building long positions here, keeping stop losses around 690 and looking out for targets around 730.
Right, interesting target levels that you can watch out for there. But let's also look at a couple of other stocks, and we've been saying that there are quite a few resignations that came over the weekend. We also saw from a Bandhan Bank CEO, that is C.S. Ghosh. He's the founder CEO who has gone on to retire from the bank. He will though be serving until July 9th. That is the last day of his current tenure, and he says that the decision to step down was pretty much voluntary, as well as they've put a search committee in place to set up for the new CEO. However, brokerages are quite iffy with this development. We've seen Jefferies gone on to downgrade it to underperform from the buy that it had before. The target too has been cut to about a 170 from the 290 that was earlier. They say that the resignation was quite a surprise move, even though the board had given that a 3-year extension or reappointment and was awaiting RBI's nod. The regulator, in fact, has gone on, doesn't clarify on any such aspects, but as per the management, if there isn't any word from RBI yet, then this could be some bit of issue, as there's no smooth succession plan in place, at least for now, and most of the senior management is all new. This uncertainty may lead on to a slower growth as well as higher credit costs and that overhang on valuations as that uncertainty remains. So that could be some bit of trouble. In fact, we're getting a few queries also on, not just Bandhan Bank, but also on from the banking pack. There is a query from Pooja who wants to know whether she should buy a Union Bank or IDFC First Bank. If Prashant, if you have to come in here, what would be a good time to be looking at either of these two stocks, and what would be your pick? We could help Pooja out here whether it should be Union Bank or IDFC First Bank.
So I think Stacey, from last week itself, I've been recommending IDFC First Bank is trading comfortably above its major resistance of 78. So now any dip can be added, and you can look out for targets around 85. If we sustain above 85, the next level is 88. I think the risk reward looks better here. Second thing is base is firmly in place, so I think that would be a good stock to go ahead as compared to Union Bank at the current price levels.
Right, Prashant. So that at those levels, maybe you could look at IDFC First Bank. Pooja, there's also another question on OMCs. Meet is asking your view on which of the OMCs at this point, whether it should be IOCL or HPCL. So maybe Prashant, quickly you could answer that, and especially when we're seeing crude, if you have to look at how crude has been acting over the past 1 week, we've seen 4% of gains for Brent crude. It even crossed that $91 barrel level and now has come back to 89. So some bit of pressure that it saw over the weekend. But between the OMCs, what should be the pick and what would be the rationale of one picking so?
So I think, Stacey, for me, I've been extremely bullish on IOC from almost the past 8-10 months, and my view continues to be the same, irrespective of any dip in the stock. Positionally, I'm looking at a very strong move in this counter. This is from a pure portfolio holding perspective for a long term. So I think any dip on this can be added. Your stop loss positionally or a portfolio stop loss has to be the stock closing below 150. Unless it does not close below 150, continue to hold the stock. And if you want a momentum or a breakout, it would be above levels at around 178, 180. If you manage to close above that, you can see speed as well. Currently, it's consolidating, building a firm base. So I think my choice in this pack would be IOC.
Right. Well, let's also look at the fundamental picture then and see the overall growth. We are heading into an earnings season that people have pretty much, kept their hopes high. There have been positive updates, one would say, at least from different packs that we're seeing so far. The banking pack also giving some good positive updates. Whereas if you look at FMCG, they are hoping to see double-digit volume growth at least in a Q4, and whether that is actually sustainable is what we're going to be discussing. But let me bring on board Prakash Diwan. He's a market expert and joining us this morning on Opening Bell. Good morning, Prakash, and thanks so much for speaking with us here. Let's get a broader perspective as we head into the Q4 earnings season. Do you think there is enough growth momentum that can actually take us forward? Because people are going to be waiting on the sidelines, we could say, or at least on the fence till the elections actually go through. So will the earnings then give markets at least that little bit of positive momentum, and is that sustainable?
Good morning. Thanks for having me on the show. So I think what earnings season does usually is set the tone for the market to start getting more decisive. Okay, the market's been close to new highs, but all-time highs, but it's not been a decisive move as yet. It's been kind of moving around. The Nifty's been in that 22,500-600 neighborhood. But what the earnings season could do is it could probably see some sort of a leadership coming back in some of the sectors. And my initial readings of the banking sector updates is that probably you will have a huge move in the banking sector. So, and that's why, if you look at all the technical inputs that we are hearing from Friday, it's largely the bank Nifty that everybody is kind of very charged up on, right? So because there is room for growth, and that would only happen if banks start clocking some decent results. But before you come to the BFSI numbers within the earnings season, you'll have to get over the phase of the IT majors coming up with the numbers. And there you could probably look, we're not very sure of what kind of numbers to anticipate very, clearly. But I think if there is some sort of an indication on the headcount stabilizing or improving from what we've seen in the last few quarters, then these are bellwether names. This activity could start percolating down to the mid-tier IT pack as well, and that means IT will participate. We've seen a little bit of a softness in expectation on IT performance after the Accenture numbers came in, but there could be a change, a shift in that. So earnings season, these are two pockets that will probably set the mood. And as you rightly said, the start of the programming, that we have FMCG volumes that have been much awaited in terms of showing some improvement. We've seen Marico give some sort of an indication that that could be different. Nestle has announced some sort of a hike in its royalty paid to the parent. So there are lots of things which could start revving up the FMCG pack as well. And if that were to participate, you'll probably have a market which gets more decisive till elections, in spite of what elections normally do, and keep things within a band. The election results will probably be the milestone for where FI money starts pouring into India, irrespective of how the numbers are, how the results are. But my sense is still then you'll probably have earnings take center stage for sure.
Right. So earnings will be at least that way, the direction that the markets will be looking forward to. But Prakash, let's talk about specifically the metal sector, because today pretty much most of your gainers are from the pack, right? From Tata Steel to JSW Steel, Hindalco, all of them comfortably in the green, at least in this trading session. We did see some Q4 updates come in from Tata Steel, wherein they've said that India's crude steel production has grown by about 4.5% on a YOY basis. They've also gone on to say that it is the highest ever quarterly deliveries that they have put out this time around, and that coming in, increasing by about 5%, coming in at 5.41 million tons. So that is for Tata Steel specifically, but the metal pack and how that has been reacting, we've pretty much seen good gains, at least for most of those, at least the metal indices as well, seeing some good gains. So what is really at play here? Because, whenever we used to talk about metals, we used to look at, it is some kind of momentum coming from China or something like that, but not anymore, one would say. So what's really driving the metal pack?
Oh, that's a very smart question, because once things move up, you need to kind of figure out the attribution, saying what is it that's kind of leading to this move. And within metals, it's purely positive, favorable demand traction. When a Tata Steel, which is one of the largest producers of steel output, talks about deliveries being slightly higher than the production numbers, it tells you that all the old stock also, some of the old stock also has started moving. And which means that the production numbers will keep on, looking at restocking given the demand that's ahead. And remember, steel demand has got nothing to do with a March end or a Q4 phenomena. It's across the year, and there is so much of capital goods led manufacturing intensity that's changing within India. There is no reason why you will not have steel participate in that. The kind of capex that I'm anticipating once the new government comes in and that overhang goes out, so this is likely to be so much of industrialization which is kind of waiting in the wings, in terms of people wanting to expand, set up new units, set up newer units in newer geographies. So when that happens, there's no reason why steel can't participate. The real estate demand has been so positive. Steel is a big input that goes into real estate infrastructure as well. So on all counts, I think it's very clear that the demand side is very positive. While China slowed down its production in the last 4-5 years, the Indian companies have actually gone ahead and made themselves very scalable and very efficient. And that's something which is going to start paying off. You remember Tata Steel 4 years back had huge debt on its books thanks to the Chorus acquisition. Today, it's completely deleveraged. It's a giant of a business in terms of having consolidated so many other ancillary businesses as well, or related businesses. And the same thing is with JSW Steel. The same thing is with JSPL. Look at Steel Authority of India. It has assets which it could still kind of start looking at producing more without putting anything into capital expenditure. So when all that operating leverage comes in, I think you'll probably see a re-rating of the sector, which could probably have some more legs than just a quarter or two. It could probably be secular enough to last a couple of years.
Right, so re-rating for the metals pack is at least what we could expect in this, especially after their earnings as well. But like we were talking about FMCG, let me quickly try and answer, get a query answered by Prashant, and then we'll come. All right. Right. So let me, okay, Prakash, let me just come back to you as well. We were talking about FMCG and how, we are expecting double-digit volume growth. We've seen good, most of them come out saying that there might be some bit of initial pressures, even Godrej Consumer for that matter, saying that, they are seeing organic sales growth in the mid-single digit, whereas volume growth of high single digit, while margins may continue to expand despite those kind of increases that they have put in their media investment. This is for Godrej Consumer specifically, but like you were pointing out, Marico also saying that, they're looking at a better volume growth this time around. So are we likely to see that number? Because we've pretty much been in that 2 to 4% range when it comes to volumes for a major of the FMCG companies. And then what should be the pecking order, whether it should be your pure consumer staples or whether the consumer discretionary, and which way should one be swaying when it comes to these then?
Yeah, so FMCG is a complex sector. I mean, you have very large players with deep presence of sorts, and very very strong segmentation. I mean, it's like Colgate Palmolive is an FMCG player, and so is ITC, but then they don't have any product in common, right? So and they cater to very different price points, different geographies, different segments of the consumer market. From that perspective, my sense is that elections usually lead to a trickle-down effect, given the sheer intensity of activity within the short 2 months period. There's a lot of travel, there's a lot of expenditure related to public events, and when all of that, so where does that money go? All the spends that are done, that eventually percolates down into the rural or the tier 2, tier 3 economy. Now, when that happens, you combine it with what happened in Jan in the Ayodhya what do you call, revival of sorts, and what possibly is likely in preparation of the Kumbh Mela, which is next year. All of of course, a lot of these are very geographically narrow. But remember, once the rural economy picks up, and these numbers that Marico or Godrej are talking about are coming in a season which is not typically their most favorable. It is only post monsoon that you see that effect where volume growth starts happening, realizations are better, all of those things improve. But if this were to start happening before the monsoon, you can imagine that there's a very clear indication of a bottoming out of this demand side. So if the demand has been tepid for the last 1 year, it's all priced into this thing. So I would be surprised if the staple players like a Dabur or an HUL actually start doing better than before a Godrej Consumer or a Marico start participating. So that's my sense. So in the pecking order, I would look at companies which are more rural oriented, more lower on the price points. A lot of the staples that are manufactured by these companies are what would start doing well, and then it will lead on to the second round of growth, which would include the Batas and the footwear companies and companies which make garments and things like that. So there's very clear escalation of the demand curve going up, and there is a very simple thing that most FMCG players are available at probably their lowest P multiples in the last many years, right? In spite of the market being at a new high. So that is a mismatch that will probably start setting itself right, and that could lead to some sort of a tactical opportunity as well.
Right. So Prakash is still sticking to the staples at this point, and then maybe a trickle-down effect is what he's hoping that the discretionary consumer ones will, then have that uptick. But as we're talking about them, let me also give you a quick update on the Q4 business update put out by Titan, wherein they've said that they're seeing a revenue growth of close to 17% on a YOY basis. They've also gone on to add 86 new stores in just this last quarter alone. So that's quite interesting. And Titan being that one stock that has been on pretty much everyone's radar. Prakash, would you want to give us your thoughts on how one should be looking at something like a Titan?
Absolutely, it's it plays to its name, right? So I mean, look at the kind of growth it's clocking, even on a significant base that it has. It's not incrementally nominal on a very small base from the previous quarters or previous years. The only thing that you need to realize is that Titan is a gorilla in a jungle of monkeys, so it will always be available at premium valuations. You have to live with that. And when things correct, when markets see a bit of a sell-off and things like that, these premium valuation companies usually tend to kind of lose some ground temporarily, maybe. But from a business perspective, and I focus more on earnings. If you look at what's contributing to this positive update, which is coming from the company, it's jewelry, which is the core sector. So the only thing that's not done well is eyewear, which is understandable because it's got a fairly significant competition coming in from the unorganized or the smaller players and things like that. But within jewelry, within wearables, within the carrot lane business, within the sari business as well, they've done so well. So what it tells you is that spending within these segments, with the slightly higher end segments, is not abating. And if that were to continue, there's no reason why Titan can't keep on clocking this, given their sheer organic expansion and presence that they've done. And one thing which you would see in the market when you go out and look at stores, Titan is getting much more deeper with its segmentation. The sub brands that it has, right from Tanishq, which is of course such a significant brand, but the lesser known brands which are into color gemstones, into solitaires, into designer jewelry, the Zias and the Mias and all of those sub brands that they keep on launching and doing so well have started making a significant presence. So I think they are way ahead of the market. The other players are catching up, whether it's a Kalyan or anything. The numbers look positive for all of them. But the scale that Titan has gives them a moat or gives them some sort of a strength, as I said earlier, the gorilla, approach. And that's where you'll probably pay a bit of top dollar to buy into Titan, but then it has its own rewards. So I'm more of a value investor, so I don't normally look at this, but of course it's a great story for those who hold it, would continue enjoying that. But the buying strategy could probably be more rewarding if you were to do it on dips.
Buy on dips would be the strategy for Titan because it's seen that good up move so far. We are seeing Sensex at a fresh record high at this point, 74,600 odd levels. The Nifty too around 22,600 levels. But Bandhan Bank, that counters down about 8% there. And of course, all of that news coming in. Maybe when Prakash can give us his perspective, not just on Bandhan Bank. We are seeing some few resignations that have come in over the weekend, be it Wipro or CS Ghosh from Bandhan Bank. Specifically to Bandhan Bank, would you have a say? And is this a knee-jerk reaction that we're seeing, or there is, because Jefferies has also gone on to downgrade that counter to underperform from buy. They've cut the target quite sharply there. So for Bandhan Bank, what should be one strategy if they're looking at it at this point?
I mean, this is an event that definitely has some bearing on the performance and hence the stock. But I would again go back to believing that markets are a slave to earnings, and eventually it is the performance of the bank that will start kind of becoming the driving force. Whether this resignation or exit impacts the performance is what I would like to comment on. And from that perspective, you see, Mr. Ghosh has been with this company right from the time it was born, right? And he's led it from the front. He's molded it to being such a strong player. But then, any exit of this nature does take time to kind of fill in the void that could get created in terms of the strategy execution. While he could probably still be at the holdco level, guiding the management to steer the business to the right in the right way, it's going to definitely impact execution because the succession plan doesn't yet seem to be comprehensive. I'm not saying it's not there, but it doesn't seem to be comprehensive, and it could possibly be announced by the company at the right time. So his interview with our sister channel on TV18 in the morning very clearly tells you that this is not a knee-jerk reaction, at least on his part. It's a well thought of, meditated kind of a move. And it would kind of take some time to fill in and repair. Remember, banking is giving you such opportunities, Stacy, that you don't need to kind of look at something which is iffy, which is not clear, because there are very clear runways to growth in a lot of the other banks. So from that relative strength perspective, I would not look at buying Bandhan Bank at the dips. But the dip could probably be, not very long lasting, as I said, because the business numbers will eventually kind of take precedence over just an event that's going to come out of the blue right now.
Right. So we're waiting for Bandhan Bank to come out of the blue. looking forward to its earnings, and that will probably give an indication to whether one should be looking at Bandhan Bank and that stock. Let me thank both my guests, Prashant Sawant as well as Prakash Diwan, for joining us this morning, helping our viewers with the queries that they had. And also to all our viewers, keep sending us your queries because we will try and get them answered to the course of this show. So do send us on our live feed when we go live with Opening Bell. But for now, we're completely out of time. From all of us that put this show together, thanks so much for tuning in.